So let's finish with capital gain. Okay, now okay friends, so last lecture we have completed the tax rates of short term capital gains and long term capital gains. Okay, now what are the tax rates? We are all aware about that now. Now two or three important things which we should keep in mind. Number one, see your chapter 6A deductions which are available to you. Chapter 6A deductions, ATC to ATU deductions, which we generally claim from our GTI. Those chapter 6A deductions are not available from STCG under section 111A, LTCG 112 and 112A. Meaning that whenever you will calculate your GTI, okay, no, how will you calculate your GTI? You will take your income from salary, then you will take your income from house property, then you will calculate your PGBP income, then capital gain you will calculate, then income from other sources you will calculate. Don't you think that in the capital gain, under the capital gain head, you must have calculated your short term capital gain under section 111A or long term capital gain under section 112A or 112. These capital gains you have calculated and shown under the capital gains head. Okay. Under the head IFOS you must have shown winnings income also. Winnings which is given under section 115 BB and 115 BBJ. Okay. So what are winnings income and all we are going to learn in the next chapter. Okay, no, in the other sources chapter I tell you about winnings also, but right now these are my 5 heads of income. In my capital gain head I would have shown the short term gain 111A, long term gain 112, 112A. Then under the head IFS I would have shown winnings under section 115 BB and BBJ. So when I total these 5 heads, okay, when I total these 5 heads, I get what? Gross total income. I get gross total income. And from that gross total income, I am eligible to claim what? Chapter 6A deductions. So can I say in your GTI, you have shown these incomes? These incomes are there in your GTI. Can I say that? So the law says that you cannot claim chapter 6A deductions from these incomes. Meaning if your GTI includes these incomes, remove these incomes from your GTI and take the chapter 6A deduction from the balanced GTI only. Because these incomes are to be fully included in the total income. Without taking any chapter 6A deduction. So what I will have to do first, from my GTI, I will have to reduce what? These incomes. Okay, I will reduce these incomes from my GTI. So what I will get in that case, friends? I will be getting the balanced GTI. From this balanced GTI, I will be claiming chapter 6A deductions starting from ATC to ATU. Okay, then I am going to get what? My total income. But that I will call as total income. Then it will be wrong. Why? Why, sir? Because my total income should also include my other incomes, no? Those short-term capital gain and everything. So which I have reduced first. Now what I'll do, I'll include those incomes in the total income. Getting my point? So what I'll do, now I will again add these incomes in my total income. Sir, if you want to, add only, then why are you reducing? The reason being, I cannot take chapter 6 deductions out of this incomes. Okay. So if I claim chapter 6 deduction from these incomes, my answer will be wrong. Hello. So first I will have to claim chapter 6 deduction from the balance GTI. Balance GTI to calculate my total income. But in that total income, I will have to show these incomes, no? Without these incomes, I cannot show my total income. I cannot tell the government that my total income is only this much. Government will say, you have earned short-term gain, long-term gain, winnings also, no? Why are you not showing that in your total income? You have eliminated just to claim chapter 6 deduction from the balance income because it is available from the balance income. Yes or no? But that does not mean that you are not going to show these income in the computation of your total income. In the total income, you are supposed to again add them. Okay, got it? Now a final total will come. That final total will be your total income. Final figure of your total income. Now whenever the tax rates is to be applied, you are going to apply the tax rate on this total income. Now can I say in your total income, now you have included all these incomes? Yes or no? Now this part of your total income, no? This part of your total income is taxable at what rate? Normal rates. On short-term gain, long-term gain, there are special rates. On winnings also, there is a special rate of 30%. So now in your total income, if you are showing all the incomes, what are you supposed to do now? From your total income, take your short-term capital gain separately. Under section 111A. On this short-term capital gain, apply what rate? Apply 15% or 20% as the case may be. And you will get the tax amount. Sure, sir. Now, you will have long-term capital gain also under section 112. On this, how much you will apply? You will apply either 20% or 12.5% as the case may be, depending on the fact that when the asset was transferred. Yesterday I have already discussed these tax rates. Okay, no? Then you will get a tax amount. Now, there will be long-term capital gain under section 112A. On that you will apply up to 1 lakh or 1.25 lakhs. You will not pay any tax. And excess over and above 1 lakh or over and above 1.25 lakhs as the case may be. Yes or no? On that excess you will apply either 10% or 12.5% as the case may be. Sure. And then you are going to get a tax amount over here. Now in your total income, you will be having winnings income also. On the winnings income, you are going to apply 30% as per section 115 BB and 115 BBJ. Your winnings are taxable at what rate? 30%, flat 30%. So apply this 30% and calculate the tax on your winnings. Everyone, are you all understanding? And on the balance part of total income, you are going to apply what rate? Either normal rate or 115 BSE rate as the case may be, depending on the fact that whether you are shifting out of the default tax regime or you are staying in the default tax regime. If you are staying in default tax regime, then apply 115 BSE rates, and if you are shifting out, then apply the normal rates. Normal rates we already know. Yes or no? Now after applying these rates, you are going to get tax. So have you calculated the tax on short-term gain, long-term gain, winnings income and all the other normal total income? Yes or no? Now you are supposed to add all these taxes. You will get tax on total income. Then you are going to get what? then you are going to get rebate if any, or you will apply surcharge if any. Yes or no? Then tax including surcharge will come or tax after rebate will come. Then on that you will apply 4% cess. Getting my point? So the entire procedure is like that only. Calculate 5 heads of income. You will get GTI. In your GTI, whatever short-term gain 111A is there, long-term gain 112 or 112A is there, and winnings income are there. From your GTI, separate these incomes, because from these incomes you are not going to get chapter 6A deduction. Claim the chapter 6A deduction from your balance GTI only to get the amount of total income. But in that total income, you will have to show your short-term gain, long-term gain and winnings. Yes or no? So again add them and you will calculate the total income. This is the final figure of your total income. Okay. Surcharge is applicable or not? Your total income has to be more than 50 lakhs. You will see this total income. This is the final figure of total income. So surcharge is applicable or not? Your total income should be more than 50 lakhs. So this final amount of total income you will check whether it is more than 50 lakhs or not. Rebate will be applied or not. For that your total income should be less than equal to 5 lakhs. Yes or no? So this final amount of total income you will check whether this is less than or equal to 5 lakhs to apply the rebate concept. Yes or no? Now from this total income, you are supposed to separate your short-term gain 111A, because on that the tax rate is different. In this total income, you might have included the long-term gain 112. Separate that also, because on that the different tax rate is prescribed. Separate the long-term gain under 112A. Separate winnings, because on all these incomes special rates are prescribed, which I have already written and I have already explained also. Yes or no? And on the balance part of your total income, any total income remaining after excluding these incomes, on that total income you are supposed to apply the normal rates or 115 BSE rates. Yes or no? So will you get any chapter 6A deduction from your short-term gain 111A, long-term gain 112, long-term gain 112A or winnings income? No. So that is the same thing which I have written over here. Deductions under chapter 6A not available from short-term gain 111A and long-term gain 112 or 112A. Yes or no? Now please pay attention. Please pay attention. Now whenever you will calculate this tax, calculate this tax, calculate this tax, and in the balance there is a dividend income. Dividend income is taxable at normal rates only. So your dividend income will be covered in the balance total income only. Yes or no? So whatever tax which you have calculated on this tax, on this tax and on this tax. Yes or no? And out of this tax, calculate tax on dividend income, because dividend income was also covered here, no? So out of this, tax on dividend income. Very easy to calculate. Don't worry. Okay, no? Very easy to calculate. Whatever tax you have calculated, that is the tax on balance total income, no? So total amount of tax divided by balance total income multiplied by 100, you will get average rate of tax. Apply that average rate of tax on your dividend income. You will get the tax on dividend income. Yes or no? For example, the balance total income was 5 lakhs. Balance total income was 5 lakhs. It also includes 1 lakh rupees of dividend. It also includes balance total income of 1 lakh. Yes or no? Sorry, it also includes dividend income of 1 lakh. Now, out of 5 lakh, 1 lakh is dividend income. But you have not calculated tax separately on 1 lakh rupees of dividend. So Kaushik, how come dividend is taxable for the company? No, please. No, please. Dividend is taxable in your hands. Okay? Don't think anything else. Logic is different. Understanding? Otherwise, the income which you are giving me, Am I earning income from you? Am I charging any fees from you? Yes or no? If I am charging fees from you, that is my income. Should I pay tax on that? I can tell the government that the income is already taxed in the hands of Kaushik. Now, tax paid income which Kaushik is giving me as my fees, don't charge tax on that. Can I tell that? So you are saying the same thing. Understanding? So don't go into that zone right now. Please stay here. Okay? Pay attention now. Yes. So total income was 5 lakhs. In that 1 lakh was dividend income. You would have calculated the tax on entire 5 lakhs. Yes or no? Now on that 5 lakhs, the tax you have calculated. On this 5 lakhs, the tax you have calculated. In this tax, how much is the tax on that 1 lakh rupees of dividend income? If on 5 lakh the tax is this much, how much should we tax on 1 lakh? Cross multiplication you can do. That cross multiplication will give you tax on dividend income. Yes or no? So this tax will be divided into two parts. This tax will be divided into two parts. Tax on dividend income and tax on other incomes. This is tax on dividend and this is tax on other incomes. Now what will happen? Please pay attention. What will happen? I'll tell you now. Why I am changing the colors, you'll come to know. See, color, red color. Color, red color. How many incomes you can see? Can I say this is the tax on your short-term capital gain? This is the tax on your long-term capital gain 112. This is the tax on your long-term capital gain 112A. And this is the tax on your dividend income. Okay. Whenever you will apply the surcharge, for that your total income should be more than 50 lakhs. Yes or no? So if your total income is more than 50 lakhs, apply 10% surcharge. Surcharge is to be calculated on the amount of tax. So on this tax, apply 10%, apply 10%, apply 10%, apply 10%, apply 10%, apply 10%. Is there any problem here? Hello sir? No problem, no? Now wait. Now if your total income is more than 1 CR, guys, if your total income is more than 1 CR, then the surcharge rate will be 15%. Yes or no? So apply 15%, apply 15% on this tax also, apply 15% on this tax also, apply 15% on this, 15 on this and 15 on this. Meaning that on all the tax amount you are supposed to apply either 10% or 15%. Okay. So why are you applying differently for all? Add the entire tax liability and on the full tax liability calculate 10% once, calculate 15% once. Then there will be no problem. But what if your total income is more than 2 crores? Can it be more than 2 crores? So now the rate of surcharge on tax will not be 15%. Now it will be increased to 25%. Do you remember the rate of surcharge? If your total income is more than 2 crores, the rate of surcharge is 25%. What if this total income is more than 5 crores? Then the surcharge rate becomes 37%. So 25% and 37%, these two surcharge rates are considered as higher rates of surcharge. What rates of surcharge? Higher rates of surcharge. And they are saying that higher rate of surcharge will not be applicable on this tax, this tax, this tax and this tax. 4 taxes you are supposed to remember. Tax on STCG 111A, tax on LTCG 112, tax on LTCG 112A, and tax on your dividend income. On these four incomes, whatever tax you have calculated, on that tax higher rate of surcharge, 25% or 37% cannot be applied. Even if your total income is more than 2 crores, even if your total income is more than 5 crores, still the higher rate of surcharge cannot be applied on these four taxes. So the maximum surcharge which you will apply on these taxes will be how much? 15% only. Even if your total income is more than 2 crores or 5 crores, the surcharge rate applicable, maximum surcharge rate applicable on these four taxes will be 15% only. Now, after excluding these incomes, what did I say? After excluding these four incomes from your total income, please listen to me. After excluding these four incomes from your total income, is your total income still more than 2 crores or 5 crores? Is your total income including winnings still more than 2 crores or 5 crores? Yes. Then on that tax, you can apply 25% or 37%. Hello? But what if that is also not more than 2 crores or 5 crores? Then on that tax also you have to apply 15% only. So the higher rate of surcharge will not be applicable on four taxes. Will you remember the names? Number 1, STCG 111A, LTCG 112, LTCG 112A, and dividend income. Whatever tax you will calculate on these four incomes, on those taxes, the higher rate of surcharge will not be applicable even if your total income was more than 2 crores or 5 crores, as the case may be. But after excluding these four incomes from your total income, now excluding these four incomes from your total income, still your total income is higher than 2 crores or 5 crores. You have removed these four incomes from your total income and still your total income is higher than 2 crores or 5 crores. Yes, then on that total income, whatever tax is there, on that tax you are supposed to apply 25% or 37%, as the case may be. Got it? But remember, if after excluding these incomes from your total income also comes down below 2 crores, below 5 crores, then you cannot apply 25% on those taxes. On those taxes you are supposed to apply 15% or 25%, as the case may be. Yes or no? So this was written here. Please pay attention. Higher rate of surcharge 25%, 37% not applicable in case of STCG 111A, LTCG 112, 112A, and one more tax is there, dividend income, which I will tell you in IFOS chapter. Okay, but I have already explained here. Deductions under chapter 6A not available from short-term gain 111A, LTCG 112, 112A, and also from winnings income, which I will tell you in IFOS. But I have already explained that right now. Okay, no? So will you remember till IFOS? Sure, no? Okay. Now, this rebate also sometimes we get. So can I say my total income was 5 lakh rupees or less and I am a resident individual? So on my total income, whatever tax I have calculated, that entire tax I can take as a rebate subject to maximum 12,500. Do you remember the amount of rebate? If I follow 115 BSc, then I have to check this total income to be 7 lakhs. Under 115 BSc, rebate is available even if my total income is more than 5 lakhs. Yes or no? But it should not be more than 7 lakhs. And the amount of rebate there is 25,000 rupees. How much? 25,000 rebate is there. So whenever I check my total income now, it should be 5 lakh or less if I am not following 115 BSc. If I am following 115 BSE, the total income should be 7 lakh rupees or less. I am a resident individual. Yes. My total income is up to 5 lakhs, up to 7 lakhs, as the case may be. Yes or no? Then I am going to get the rebate. Rebate of tax which I have calculated on my total income. So the entire tax I have to first add. That tax I can take as what? Rebate. Subject to maximum 12,500. If I am not following 115 BSE, or if I am following 115 BSE, then maximum 25,000. Getting my point? But remember, your entire tax you can claim as rebate subject to maximum 12,500 or 25,000 except this tax. This tax cannot be claimed as rebate. No. This tax can be claimed as rebate. Yes. This tax can be claimed as rebate. This also, this also, this also. Any tax can be claimed as rebate, but not the tax on LTCG 112A. This tax cannot be claimed as rebate. So, when I calculate the tax liability, I will have to separate this tax because I have to pay this tax entirely to the government. I cannot take the rebate. After eliminating tax on LTCG 112A, whatever tax remains, that I can claim as rebate subject to maximum 12,500 or 25,000. Getting my point? So what they are saying, please check. Higher rebate under section 87A shall not be available from tax on LTCG 112A. This tax cannot be claimed as rebate. All the other taxes can be claimed as rebate subject to maximum 12,500 or 25,000 as the case may be. Yes or no? So out of your total tax liability, separate this tax on LTCG 112A, separate this. We are not going to give you rebate. Why? There is some logic. Bloody for 1 lakh, for the first 1 lakh or 1 lakh 25,000, we are not taking any tax. Over and above 1 lakh, over and above 1 lakh 25,000, we are charging very concessional, very nominal tax. And that also you want in rebate. We will not give. At least pay this tax, no? Long-term capital gain 112A, for the first 1 lakh, for the first 1 lakh 25,000, we are not charging any tax also. Whatever tax which you have calculated, this tax will be the tax on your long-term gain, which is over and above 1 lakh, over and above 1 lakh 25,000. And that is also at a very nominal rate of 10% or 12.5%. And that also you want us to give you as rebate? No, we are not going to give you. Because it is already concessional, very less. Okay, you have to pay this. Cannot be given in the form of rebate. Other taxes you claim, no, as rebate, we are going to allow. Understanding? Everyone, sir? Sir, why this higher rate of surcharge? Why this higher rate of surcharge not applicable on? You should ask these type of doubts. Sir, even without asking, I'll tell you the logics. Don't worry about it. Now tell me, this 25% or 37%? 25 or 37%. Don't you think it is a higher rate of surcharge? The tax rate applicable on this income is a concessional tax rate. Government is saying we are going to charge short-term gain covered under 111A at a concessional rate of 15% or 20% as the case may be. The rate is concessional only. Even the long-term capital gain under section 112 or 112A are taxable at concessional rates only compared to your normal rate of income, which can be up to 30%. Yes or no? These are the concessional rates only. No, we are not charging up to 30%. We are charging less rate. Sometimes 15%, sometimes 20%, sometimes 12.5%. Hello, sometimes up to 1 lakh no tax. Over and above that 10%. Sometimes no tax up to 1 lakh 25,000. Over and above that only 12.5%. So these are the concessional tax rates which we are offering. So the tax rates which we are offering are concessional. Hello? And on that, if we charge higher rate of surcharge, that is not good, no? Hence our surcharge rate will also be limited up to 15% only on these taxes. since the tax rates themselves are what? Concessional tax rates. So we are not going to harass you by charging higher rate of surcharge on these incomes. Getting my point, everyone? Dividend income, no? Dividend income. This Kaushik was saying that it should be exempt. No, it was exempt earlier. But on that dividend, the additional tax was paid by the company. Under section 115O, there was one tax known as DDT, dividend distribution tax. So the company used to pay income tax on its own income also, and the company used to pay tax on the additional income tax on the dividend also, which the company used to distribute to the shareholder. And hence, the dividend was exempt in the hands of shareholders under section 1034. There was one section earlier, 1034. Under that section, the dividend used to be exempted. Why? Because the company used to pay additional income tax on that dividend. Company used to pay tax on its own income. Out of that income, whatever dividend the company is giving to the shareholder, that is the income of the shareholder. It should be taxable in the hands of the shareholder, but the tax will not be taken from the shareholder. Company, you only pay additional income tax under section 115O in the form of dividend distribution tax. That was known as DDT, dividend distribution tax. That the company used to pay. And since the company has already paid tax on the dividend, DDT on the dividend, so the shareholder should not be taxed again. Getting my point, everyone? Earlier, the shareholders used to get what? Exemption for dividend. Now, all of a sudden, the dividend got taxable in the hands of shareholder, meaning that 1150, the concept of dividend distribution tax, is eliminated. Just like 115 QA is eliminated. Do you remember 115 QA? Tax on buyback price. 115 QA eliminated, no, from this year onwards. So few years back, 115O was also eliminated. DDT is now not supposed to be paid by the company. So hence the shareholder is also not going to get any exemption. Now this dividend is going to be taxed in the hands of shareholder. Just imagine if you are a shareholder, earlier the dividend was not taxable in your hands. Now all of a sudden it starts getting taxable in your hand. And on that, if you are charged a higher rate of surcharge, will it sound good? So the government is saying, whatever tax on dividend income you are paying, no. On that tax also, don't pay what? Higher rate of surcharge. So pay the tax on dividend and pay the 15%, maximum 15% surcharge on dividend, tax on dividend. Yes or no? We are not going to charge higher rate of surcharge from your tax on dividend income also. So that is the reason why these four taxes, on these four taxes, higher rate of surcharge is not applicable. Understanding? Everyone? Now this last point of discussion. Okay? Read it. Adjustment of unexhausted basic exemption limit is available to resident individual or HUF from STCG 111A, LTCG 112 or 112A. Now what is this unexhausted basic exemption limit? What is adjustment? Okay, for that I'll have to take example. Did you understand this much? Everyone understood this much? See, here I will write down maximum surcharge at 15%. Surcharge at 25% or 37%. Applicable or not applicable? Not applicable. Wait, I'll do this. Same thing here also. Same thing here also. Done, sir? And same thing Here also. Miniature version. Can you see this? This one? The same thing which I have written, no? In these two parts I have written here. Color, red color, everyone the thing is same. Okay? Everywhere. Now pay attention. On this and this. Color, blue color. Color, blue color. Surcharge at 25% or 37% if after reducing if without considering STCG under section 111A, LTCG 112, 112A, balance total income including winnings is still greater than 2 crores or 5 crores. So if your balance total income including winnings is higher than 2 crores or 5 crores after excluding these four incomes, then on the balance total income, whatever tax you have calculated, including winnings income, yes or no, you are going to pay how much surcharge? 25% or 37%. Got it? Now few questions are there in your first chapter, ICI study mat. Those few questions have the same concept which I have explained right now about the surcharge. Just imagine this concept they have given in the first chapter. How the students are going to understand these things in the very first chapter? It took me some time to convince you till here. Still, you are very, new to all these things. And if this thing was taught to you in the first lecture, even I have, taught you first chapter, I have also spoken these things in my first lecture. But I have told you not to worry. If you are not understanding, you will understand later. But see, now you have understood. Okay. Now pay attention. The last concept which I am going to discuss there, the point number 2, which I told you to read. Okay, no? See, if your total income was 4,50,000 only. Possible 4,50,000. Now in your total income, for example, you had short-term capital gain under section 111A. See, whatever discussion I am making right now, will be equally applicable if my total income has LTCG 112 or LTCG 112A. This same discussion will be applicable if my total income has LTCG 112 or 112A. But right now, in my example, I am taking STCG 111A. Yes or no? So in my total income, 4,50,000, the short-term capital gain under section 111A was 3,50,000. Possible or not possible? Possible. Now pay attention. The balance total income in that case was how much? Only 1 lakh. Now how much tax rate on STCG is applicable? Either 15% or 20%, depending on the fact that when the shares etc., listed shares, STT paid, short term gain, yes or no, when the shares are transferred. Okay, no? So for example, the transfer was made on or after 23rd July. So the short term capital gain under section 111A is arising from transfer on or after 23rd July 2024. So what will be the tax rate applicable here? Now 20% tax rate will be applicable. On my balance total income, how much tax rate, sir? If I am not following 115 BSE, then normal rates. But if I am following 115 BSE, then 115 BSE rates. Yes or no? Do you know the 115 BSE rates? Do you know 115 BSE rates? I will tell you. Up to first 3 lakhs, no tax. 3 lakh to 7 lakh. On this slab of 4 lakhs, 3 to 7, 4 lakh only, no? You will pay 5%. 7 to 10. On this 3 lakh slab, you will pay 10%. 10 lakh to 12 lakh. On this slab of 2 lakh, you are going to pay 15%. 12 to 15, you are going to pay 20%. And any total income over and above 15 lakhs, you are going to pay 30%. Okay, no? These are the tax rates under 115 BSE, concessional tax rates. Remember, 25% rate is not there, huh? Nil, 5%, 10%, 50%, 15%, 20%, and then directly 30%. Okay? Remember, the higher rate of basic exemption limit available to senior citizen, super senior citizen is also not available here. So whoever you are, whatever type of individual you are, whether you are a senior citizen or a non-senior citizen or a super senior citizen, or you are HUF, you are AOP, BOI, AJP, you are any type of person, the basic exemption limit is same for all, 3 lakhs. But under the normal tax rates, the basic exemption limit is higher. If you are a senior citizen, it is 3 lakhs. If you are a super senior citizen, it is 5 lakhs. Yes or no? So pay attention. On the balance total income, I am supposed to either apply normal rates or I am supposed to apply 115 BSE rate. So what rates we should apply? Let us say we are applying normal rates. Because we shifted out now. So we are applying normal rates. Now tell me, up to 2,50,000, am I going to pay any tax? But my balance total income is within 2,50,000. So am I going to pay any tax? No. Still I would have earned 1,50,000, I would not have paid tax. Because 1,50,000 basic exemption limit is still unexploited, unexhausted. Out of 250, which you are not taxing, I have earned only 1 lakh rupees. So I still have 1,50,000 basic exemption limit remaining. If I would have earned 1,50,000 more, still I would not have paid tax on that. Yes or no? But shit, balance total income is only 1 lakh. I still have 1,50,000 basic exemption limit remaining unexhausted. Yes or no? But still I have to pay tax because in my total income short term gain is there. And from here basic exemption limit is not given. No? Basic exemption limit is given from balance total income. So I will have to pay tax in this year. And the tax is paid only because my total income is having this type of income. If this type of income was not there, in my total income, I was not supposed to pay any tax. Yes or no? So in that case, do one thing. How much was your basic exemption limit? Tell me. If you are following 115 BSE, then take 3 lakhs. Okay, no? But if you are not following 115 BSE, then take 2,50,000. Can I say my total income is within my basic exemption limit? And still 1,50,000 basic exemption limit remains unexhausted. I will call this unexhausted basic exemption limit. UEBEL. Unexhausted basic exemption limit. Even if I would have earned this 1,50,000, no. I still had 1,50,000 basic exemption limit. I was not supposed to pay tax till this 1,50,000 also. But see, I'm not getting any benefit for this. And my total income is having short-term gain. I have to pay 20% tax on that. Yes or no? Don't worry. Are you a resident? Yes, sir. Are you individual or HUF? Yes, sir. Do you have any Do you have any unexhausted basic exemption limit with yourself? Unexhausted basic exemption limit? Do one thing. You can adjust this from your short term gain that is given in 111A only. 111A says that if you have any unexhausted basic exemption limit, adjust that from your short term capital gain under section 111A, and whatever short term capital gain will be there, after adjusting that, on that only you pay 15% or 20% as the case may be. Yes or no? But for that you need to be a resident individual or HUF. So if you are a resident individual or HUF, on your short term capital gain under section 111A, we are going to charge 15% or 20%. But that short term capital gain should be after adjusting the unexhausted basic exemption limit, if any. That adjustment is given under section 111A only. 111A only says that this can be adjusted. Yes or no? Now after adjusting this, how much is remaining? 2 lakhs. On that 2 lakh, pay 20%. Why 20%? Because the transfer was on or after 23rd July. So on this short term gain, 20% tax rate will be there. So how much will be tax now? 40,000 tax here. And what will be the tax here, friends? Here my tax liability will be zero, nil, because my basic exemption limit is not crossed only. Yes or no? So have I calculated tax on my special income? Yes. Have I calculated tax on my normal income? Yes. Add both the tax. Add both the tax. I will get tax on total income. Yes or no? So now if after adding these two taxes, I will get tax on total income. That is how much? 40,000. Now in this tax, I have to include surcharge also. But for that my total income should be more than 50 lakhs. How much is my total income? Only 4 lakh 50. Am I going to pay any surcharge with tax? No. But will I get any rebate, sir? Yes. Because see, I am a resident individual and my total income is also less than 5 lakhs. Hello? So whatever tax which I have calculated on my total income, I can claim that tax as what? Rebate. But the tax should not be tax on LTCG 112A. So this tax is not, there is no tax on LTCG 112A calculated and given here. So this entire tax can be claimed as what? Rebate. Hello? Subject to maximum 12,500 or 25,000 if I am following 115 BSE. Hello? But I am not following 115 BSE. I am following normal rates only. No? Hello sir. So how much rebate I can take? Maximum 12,500. Getting my point? So tax on total income minus what? Rebate under section 87A will be either the 40,000 amount of tax or 12,500, whichever is lower. 12,500 will be the rebate. What will be the final tax? It will be 27,500. This is tax on total income after rebate. Now in this you are supposed to add what? Add health and education cess at the rate of 4%. So what will be the 4% amount, guys? Come on, tell me fast. 27,500 into 4% will be 1,100. Add that, we'll get 28,600. This is your gross tax liability. Now from this, TDS, TCS, advance tax, everything will be reduced. Relief under section 89 will be given. AMT credit will be reduced. After reducing all those things, net tax liability will remain, that I will pay as self-assessment tax in the assessment year, or refund will be there. But the tax calculation should happen like this. Now instead of short-term capital gain, not 111A, if I would have long-term capital gain under section 112, I would have done the same thing. If I would have long-term capital gain under section 112A, then also I would have done same thing. Getting my point? unexhausted basic exemption limit, if any, can be adjusted under section 111A, 112 and 112A only. Cannot be adjusted against winnings, cannot be adjusted against any other special income. Unexhausted basic exemption limit can be adjusted only against these three incomes. What? Number 1, short term gain 111A. Number 2, long term gain 112A. Number 3, long term gain 112. If instead of short term gain 111A, I had long term gain 112 or I had long term gain 112A, I would have done the same to same thing. Not a single change. Will you be able to do it? Sure, sir. But now wait. I will put you in some trouble. Ready? Sir. Sir. My total income, no, sir. Is 8 lakhs. Possible, not possible? Now, out of this 8 lakh, no, sir. I am having short term capital gain under section 111A. Wait. I'll just write 111A. Will you understand? Will you understand? I'm talking about short term gain under section 111A. Okay, no? That amount was 1,50,000. I'm having 112 long term capital gain. Long term capital gain 112. Okay. And that amount was 2 lakhs. I'm having long term capital gain 112A amounting to rupees 3 lakhs. I'm having winnings under section 115BB, winnings 50,000. Possible? And balance total income. So how much is the total income? 224,437. 1 lakh only. Yes or no? Now the assessee is following 115 BSE. They have told you that assessee is following 115 BSE. Assessee is a resident, individual or HUF. This information also they have given. Okay. And total income is calculated 8 lakh rupees. Either they will give you the total income or they will tell you to calculate this. So first you'll have to calculate total income and your total income will be 8 lakhs. Okay. Now tell me, if I assume that all the transfers of capital assets were made on or after 23rd July. If I assume that all the capital assets are transferred on or after 23rd July. Okay, no? What will be the tax rates on 111A? Taxable at 20%, taxable at 12.5%, not taxable up to 1,25,000 and over and above that 12.5%, winnings always taxable at 30%, and balance total income. Now I will not apply normal rates, I will apply 115 BSE rates. So the basic exemption limit under 115 BSE, the basic exemption limit under 115 BSE is 3 lakhs, no? Now can I say still some unexhausted basic exemption limit I am having amounting to 2 lakhs? Yes or no? Now my first question, can you adjust this unexhausted basic exemption limit against 111A? Can you adjust it against 111A? Yes. Can you adjust it against 112? Yes. Can you adjust this against 112A? Yes. Can you adjust it against winnings? No. Against winnings you cannot adjust this. Okay, no? So only 3 incomes are possible. Against that, this unexhausted basic exemption limit will be adjusted. Now tell me, if given the chance, against which income you would like to adjust it first? The incomes which is having highest rate of tax or income which is having lowest rate of tax? Against which income you would like to adjust this? Higher income tax, or income taxable at lower income, lower tax rate? Definitely, sir, the income which is having higher tax rate, against that only I will set off. I will adjust. Hello. So if the tax rate on 111A was 20%, assuming that all the assets are transferred after 23rd July, so I have to pay 20% on this. Hello, sir. I have to pay how much? 20% on this. I have to pay only 12.5%. On the first 1,25,000, I don't have to pay tax only. Hello. And over and above that, I have to pay only 12.5. So it is always better to adjust this first from this. Hello. Getting my point? And whatever remains, then I will adjust against this. Hello, sir. And if something more remains, then against this. Getting my point? Then against this. First, second, third. So always try to adjust your unexhausted basic exemption limit against that income first, which is having highest rate of tax. Yes or no? So can you adjust 2 lakhs from 111A? Yes, but for that 111A should be 2 lakhs or more. So will you be able to adjust 1,50,000 out of this? So can I say from this 1,50,000 I will reduce 1,50,000? There will be no short-term gain remaining to be taxed at 20%. Yes or no? So what will be the tax here? The tax here will be nil. Understood? So I have eliminated that entire income on which I was supposed to pay 20%. That is more beneficial for me, no? Now still I am having 50,000 basic exemption limit, which I can adjust from 2 lakh also, I can adjust from 3 lakh also. From where should I will adjust it from 2 lakhs, because that entire 2 lakh is taxable at what? 12.5. And 3 lakhs up to 125 is not taxable only. Hello. And over and above 1,25,000 only 12.5%. So it is always better to adjust it from 2 lakhs. Yes or no, sir? So 50,000 balance will be adjusted from here. So this will be my 1,50,000. On that I will pay 12.5%. Then can I say tax on this will be 1,50,000 into 12.5%, 18,750. Now on this 3 lakhs, up to 1,25,000, will you pay any tax? Up to 1,25,000, will you pay any tax? No, you will not pay any tax. What is the excess over and above 1,25,000? It is 175 excess, no? On that excess, I will apply 12.5%. So how much will be 12.75? Sorry, 12.5% of 1,75,000. It will be 21,875. Yes or no? On this winnings, I have to pay tax at the rate of 30%. So the tax here will be 15,000. And on this, the tax here will be nil. Can you calculate like this? Sure. Very easy, no? But you have to solve few questions like this. Then only you will be comfortable. Okay? Now, this plus this plus this plus this plus this. Your tax on total income will come. So what is your tax on total income? This will be nil plus 18,750 plus 21,875 plus 15,000 plus nil. You will get 55,625. Everyone getting this? Now, will you add any surcharge? No, because see, your total income is 8 lakh only, not more than 50. So no need to add surcharge. Okay, no? Will you reduce any rebate? No, because for 115 BSE, rebate comes only if your total income is up to 7 lakhs. Okay, no? So up to 7 lakh total income is not there. Hello, up to 7 lakh total income is not there. Total income is more than 7 lakhs. So you are not going to get any rebate also. Now will you add health and education cess? Yes. At the rate of 4%. 55,625 into 4% will be 2,225. Add it. You will get 57,850. This is your gross tax liability. Okay, sir? Understood? So this was the important part which I wanted to discuss with you. Okay? Now pay attention. In your notes, these notes I have forwarded. Okay, no? You must be having these notes. So if the last page is there, can you see last page? This page you do after doing the tax rates, total income, everything. Okay, no? In the end, you come and see this. In the total income calculation, no? These things will be very important. So this is a summary that okay, if income is under section 111A, short term gain, what is the rate of tax? 15%. But with effect from 23rd July 24, it has become 20%. And surcharge rate on this tax, surcharge rate cannot be more than 15%. Yes or no? Health and education cess will be applicable on this tax. Can you adjust any losses against this income? Yes. Can you take chapter 6A deduction against this income? No. Can you adjust the unexhausted basic exemption limit from this? Yes. Can you claim the rebate of this tax? Yes. Yes or no? Likewise, I have done it for all the incomes. See, 112 also, 112A also, 115BB, 115BBE, dividend income, other incomes. For all, I have done it. Yes or no? So in the end, no, when we are going to solve the total income questions and all, that time come and see this entire summary table, you will understand. Okay. So right now, the theory part of capital gain is over. Nothing remains. Everything, 100% coverage we have done. Okay. One small exempt transfer I am supposed to tell you, that I'll tell you later on. But first, solve two questions which are pending, then the chapter will be finished. Okay, I'll tell you that exempt transfer also, don't worry. Come to your ICI study mat. Question number 1 is pending, no? From test your knowledge, only one question is pending, no? Hello, yesterday do you remember that we have learned that how to calculate the capital gain under section 112A long term gain? 55 to AC, actual cost, or fair market value as on as on 31st January 2018, whichever is higher can be taken as cost. Long term gain on transfer of listed equity shares, units of equity oriented mutual fund. Do you remember that? That time the calculations which we did, I did three separate different examples in my yesterday's lecture. If you remember those things, no, this question will be very easy for you. Very easy question. But remember, this question will be easy for you, but actually this question is tricky. So we are going to solve this question. Okay, sir. Question 1. Mr. Mithun purchased 100 equity shares of Good Money Company Limited on 1st April 2007 at a rate of 1000 per share. Shares are purchased prior to 1st February 2018. Prior to 1st February 2018 in the public issue of the company by paying STT. So the shares are listed, you acquired in public issue, and at the time of acquisition you paid the STT also. Very good. Company allotted bonus shares in the ratio of 1:1 on 1st of December 2023. So 1000 bonus shares also you are getting. 100 bonus shares also you are getting. He also received dividend of 10 per share on 1st May 2024. See, deliberately no, they'll give you multiple dates. Because students usually tend to get confused by looking at so many dates. Okay, don't get confused. First of all, in your mind, try to imagine what was happening, what had happened. Okay, now he sold all the shares on 1st October 2024. All the shares means 100 shares which he bought and 100 bonus shares which was issued to him. Okay, so for these 100 shares, the period of holding will start from 1st April 2007 to 1st October 2010. For these 100 bonus shares, the period of holding will start from 1st December 2023 to 1st October 24. Done? Next one. Oh, he is selling them for 4000 per share through a recognized stock exchange and paid brokerage of 1% and securities transaction 0.02%. Very good. For STT, you are not going to get any. For STT, you are not going to get any deduction. So STT paid at the time of purchase, ignore that. STT paid at the time of transfer, sale, ignore that. Okay. Next one. Compute total income and tax liability if Mr. Mithun pays tax under default tax regime. Yes. Assuming that he is having other income of 8 lakhs, fair market value of the shares on 31st January 2018. The moment you will see this fair market value, no, understand that you have to calculate the long term gain under section 112A. Done? Now, very easy question. Computation of total income. Then I will calculate what? Then I will calculate the tax liability also. So to calculate total income, I need salary income. Do I have salary income in the question? No, no need to write also. I need house property. Do I have house property? No house property. Do I have PGBP? No PGBP. I will directly start from capital gains because in the question capital gains income is there. Okay, no? So now I will start from capital gains. See, other incomes which they are saying no might be my PGBP, salary, and house property. It might be those incomes, but I'll add them in the end. Okay, no? Capital gains on transfer of what? 100 bonus shares and 100 purchase shares. Okay. So capital gain. To calculate capital gain, I will first take full value of consideration. What will be the full value of consideration? It will be my sale proceeds. So can you do 100 into 4,000? It will be 4 lakhs. For bonus shares also the same sale price I have received. Okay. Now full value of consideration is this. Then out of this, instead of doing the calculation like this, no, wait, capital gains 100 shares. Okay, this is okay. Less transfer expense 1% brokerage. So 1% of 4 lakh will be 4,000, and here also it is 4,000. Now I will get net consideration 3,96,000 and 3,96,000. Okay, sir. Minus cost of acquisition. Now for 100 purchase shares, the cost of acquisition will be determined as per 55 to AC, because these shares were acquired prior to 1st February 18 and transferred in 24-25, meaning on or after 1st April 2018. And at the time of purchase also STT was paid, and at the time of sale also the STT is paid. And the shares are long term. 100 purchase shares are long term. But 100 bonus shares are not long term. Their period of holding is less than 12 months. Yes or no? So, cost of acquisition for 100 bonus shares will be how much? Nil only. Because the bonus shares are issued on or after 1st April 2001 and also on or after 1st February 2018. Yes or no? Whatever bonus shares which are issued on or after 1st April 2001 as well as on or after 1st February 2018, what is the actual cost? I will have to take nil only. But for the 100 bonus shares which are purchased, I will have to now determine the cost of acquisition. Can I take actual cost? Yes. Actual cost was how much? I acquired those shares for 1,000 per share. So 1,000. And at the time of acquisition, I did not pay any STT or brokerage. Yes or no? So tell me, 1,000 into 100 will give me 1 lakh. 1 lakh rupees, or what is the fair market value? 2,000 as on 31st January. 2,000, no? So 2,000 into 100 will be 2 lakh. But remember, this 2 lakh rupees of fair market value cannot be more than 2 lakh rupees of fair market value cannot be more than my selling price. Selling price is 4 lakh. Fair market value as on 31st January 2018. Fair market value as on 31st January 2018, which I am going to take as my cost, 2 lakh rupees, cannot be more than the selling price. Is it more than selling price? No. So I can take fair market value of 2 lakh or actual cost 1 lakh, whichever is higher. So can I take 2 lakh rupees as my cost? So if I take 2 lakh rupees as my cost, what will happen? 3 lakh 96 minus 2 lakh, I'll get a long term gain of 1 lakh 96. Yes or no? Okay. So what I'll do now? I'll take cost of acquisition. This will be 2 lakhs. And how did I get 2 lakh? Under section 55(2) AC, 2 lakh rupees. And what I'll do the calculations over here. Cost of acquisition. A, actual cost, which is 1 lakh. How did I get it? 100 into 1000. Or B, fair market value on 31st January 18, which was 2 lakhs. Or sale price, sale proceeds. How did I get this 2 lakh? 100 into 2000. And sale proceeds is 100 into 4000 is 4 lakhs. So what I'll do whichever is lower here. That is 2 lakhs only. Okay. Now this 2 lakh, I will ignore this 4 lakh then. Okay. 2 lakh or 1 lakh. Whichever is higher. So higher is 2 lakh only, which I am taking as cost over here. Got it, sir? And cost of the bonus shares is nil. Very good. Now remember, even if I am calculating the long-term gain for these 100 shares, long-term gain is calculated under section 112A. Hello? Long-term gain is calculated under section 112A. No indexation will be available in the cost. Okay, no? Will you remember this? Very good, sir. So, what will be my capital gains? Sir, capital gains here will be 1,96,000. And here the capital gain will be 3,96,000. Is it LTCG under section 112A? Yes. And is it STCG under section 111A? Yes, sir. This is STT paid short term gain, no? How did you know that this is long term, this is short term? So for that you saw period of holding. What was the period of holding? For these shares, 1st April 2007 to 1st October 2024. 1st October only, no? Yes. And for bonus, it was 1st December 23. So from 1st December 23 to 1st October 24. Done. This is greater than 12 months and this is less than 12 months. Therefore long-term capital asset, therefore short-term capital asset. Hence the capital gain calculated is long-term here and short-term here. Understanding, sir? What is happening in your life? Okay, so now you have calculated the capital gains. Now other incomes are also there and IFOS is also there. because you are getting dividend in this year, 1st May 2024. Please check on all the shares. Before you are transferring on December, hello, before you are transferring in October, sorry, before you are transferring in October, in the month of May, on all the 200 shares, you are getting what? Dividend of 2000 rupees. Okay. Did you all get this capital gain? Everyone? Did you commit any mistake over here? No mistake, no? Perfect. Very good. So see, now if I'll say that under the head capital gains, under the head capital gains, I have two incomes. One is my LTCG under section 112A and another is STCG under section 111A. LTCG was 1,96,000 and STCG is 3,96,000. This will be my capital gain income. And now, do I have IFOS? Yes. Under the head IFOS, can I take dividend income? That is 200 shares, and per share how much dividend? 10 rupees dividend you are getting, no? So 2000 rupees here. And wait, other incomes also I will write down here only as my IFOS. Okay. So other incomes were 8 lakh. Can I say my total is 8,02,000? Now if you will total 8,02,000 plus 3,96,000 plus 1,96,000, you are going to get 13,94,000. Everyone getting this? This is your gross total income minus chapter 6A deductions. No information given in the question, and even if the information was given, I was not able to get chapter 6A deduction because I am following 115 BSc. Getting my point? So when you follow 115 BSc, you don't get chapter 6A deductions also. 2-3 deductions under chapter 6A which are there, which you can claim, but all the chapter 6A deductions are gone. I will not be able to claim. Nil. So my total income now will be how much? 13,94,000. Now on the same total income, now I have to apply what? Tax rates, and my tax will be calculated. So my total income, which is 13,94,000, out of this 111A short term capital gain is how much? How much, sir? It is 3,96,000. Sir, 112A long term gain is there? Yes, sir. How much? 1,96,000. Sir, balance total income is there? Yes, sir. How much? 8,02,000. Done, sir. Now, you must have applied the normal tax rates, Akshaya. You must have applied the normal tax rates. Oh, old study mat. Ayyo. The same question is there. Okay. So, can I apply 20% directly on this? Why 20%? Because the transfer was made on or after 23rd July, 1st October. Yes or no? So 20% will be how much? 79,200. This is the tax. From this up to 1,25,000, I will not calculate any tax. Yes or no? And excess is how much? 1,96,000 minus 1,25,000, you are going to get 71,000. On that you are going to apply 12.5%. Yes or no, sir? into 12.5% will be 8875. Now on this 8,02,000 you are going to apply 115 BSc rates. Okay, so up to first 3 lakhs 115 BAC rates. First 3 lakhs you are not going to pay any tax. Then 3 lakhs to 7 lakhs. On this 4 lakh you are going to pay 5%, meaning 20,000. And wait, from 7 lakh to 10 lakh it is 10%. So are you going till 10 lakh? No. 7 lakh to 8 lakh 2,000. 1 lakh 2,000 you are going to pay 10%. That is 10,200. So can you tell me the amount of tax? 30,200. Understood, sir? So now what will be my tax on total income? It will be 79,200 plus nil plus 8875 plus 30,200. I'm getting 1,18,275. Everyone getting this? Wait, tell me, is your total income more than 50 lakhs? No, no surcharge will be added to the tax. Yes or no? Is your total income less than equal to 7 lakh 7? Because you are following 115 BSc, so you have to check what rebate. For rebate, total income 7 lakhs. Yes or no? So is your total income less than equal to 7 lakhs? No. So no rebate will also come. Directly apply 4%. Add health and education cess at the rate of 4%. So 4% of this amount will be 4731. Total 1,23,006, and you have to round off to the nearest multiple of rupees 10, 288B. So you'll round it off to 1,23,010. This will be your final tax liability. Got it? This type of question, please see this type of question before exam. Revise this question once, because this type of question can be asked in MCQ also. A case study will be given and 4-5 questions, small questions will be made on this. So you are supposed to do the calculation on the calculator and choose the correct answer. And if asked as a descriptive question, it will carry minimum 8 marks. Trust me on this. Okay? So will you be able to solve the questions like this? Perfect. Now the last question. Last question we are going to solve. One is done, no? Now the last question is illustrations. So in your illustrations, mark this question also as important. Illustration number 13. See. Illustration number 13. Calculate the income tax liability for the assessment year 25-26 in the following cases. See, 4 assessees are there, A, B, C and D. Out of them, only one is a resident and his age is 81. So he is a super senior citizen. If you are applying normal rates, shifting out of 115 BSc, then you will have to take the basic exemption limit 5 lakh rupees. But see, if you are not shifting out, no? If you are not shifting out, meaning that you are staying in 115 BSc, you are following default tax regime, no? Then in that case, for all of them, the basic exemption limit remains same, 3 lakhs only. Hello, sir? No higher basic exemption limit. Even if you are a resident, even if you are a non-resident, if you are a senior citizen, if you are a super senior citizen, will not make any difference. The basic exemption limit for all will be 3 lakhs only. Okay. So remember, on your total income, which is other than long-term capital gain. So the total incomes are given, and this total income does not include your long-term gain. So on this total income, either you will apply normal rates or 115 BSC rate, as the case may be. Yes or no? And on the long term capital gain, which they are telling you, assuming that the transfer took place before 23rd July, before, meaning that the long term capital gain is calculated after taking indexation and all. So that long term capital gain at that time was taxable at the rate of 20%. Yes or no? But remember, for the first long term gain earned by Mr. A, tax will be paid under section 112 at the rate of 20%. Okay. For the second Mr. B, sorry, Mrs. B, the tax will be calculated under section 112A at the rate of 10% over and above 1 lakh. Yes or no? Over and above 1 lakh. So, at the rate of 10% over and above 1 lakh. Because the STT paid short term gain is given 10,000 rupees. Now, just imagine 10,000 is the gain. To be taxed under 112A. But that will be taxed only if the capital gain is more than 1 lakh, no? How much is the capital gain? Only 10,000. So the entire 10,000, no tax will be paid. Getting my point? Now 60,000 on sale of agricultural land in rural area. Don't you think this capital gain shouldn't have been calculated at the very first, uh, at the very first moment, it should not be calculated only. But even if they have calculated and given it to you, will you charge any tax on this? No. Because rural agricultural land is not a capital asset, and the capital gain arising on transfer of rural agricultural land is your agricultural income fully exempt. Okay. Next, for Mr. D, there is no capital gain only. Now, if Mr. A, Mrs. B, C, and D pay tax under default tax regime, what will be your tax liability? If they exercise the option to shift out of the default tax regime, what will be your tax liability? Okay, no. So here they are saying that you are following 115 BAC, and here they are saying that you are not following 115 BAC. So let's start. Guys, if 115 BAC followed, okay, so first of all I'll have to take total income other than capital gains, and in that I will have to add long term capital gain on transfer of vacant plot of land, listed equity shares, then rural agricultural land. Okay, this is A, B, C and D. Done? No sir. A, B, C and D. Now tell me one by one. For A, for B, C and D, what is the other income which they have given in the question? It is 240, 310, 590, 240, then 310, wait, 310 and 590, and last one, how it is, how much is for last one? 4,80,000. So for last one it is 4,80,000. Now vacant plot of land 85,000. I will write down 85,000 over here. Dash, dash, dash. Listed equity shares 10,000 I will write in the second column. Dash and dash. Rural agricultural land dash, 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 dash. Rural agricultural land I will not write only. I have deliberately written, but I will not take that capital gain in my total income because that is not taxable. So instead of writing dash, I will do nil. Okay, since it is not taxable. Now can I calculate my total income now? Can you all calculate the total income, guys? Here it will be 2,40,000 plus 85,000. You will get 3,25,000. 3,10,000 plus 10,000. You will get 3,20,000. Here it will be 5,90,000. Here it will be 4,80,000. Okay. Now pay attention. This is NR, NR, R, NR. This will be useful for rebate. Rebate is available only for residents. So only in the third case the rebate will come. All the other cases don't even talk about rebate. Okay, no? Now pay attention. Can I say this should be my final total income? This is my final total income and I will apply the tax rate on this only. So on the entire 3,25,000, should I apply 115 BSE rate? No, 115 BSE rate will be applicable on 2,40,000. So out of the total income, if I calculate tax on first 2,40,000, total income except LTCG on first 2,40,000. So what is the total income except LTCG? It is 2,40,000. On that 2,40,000, what will be the tax? It will be nil because the basic exemption limit is 3 lakhs. Okay. Now, what will be the tax on LTCG under section 112 or 112A? Okay, no? So under section 112, what will be the tax on 85,000? Wait. Don't be in a hurry. Do you have 2,40,000? Are you going to pay any tax on 240? No, because your Basic exemption limit was 3 lakhs. So still you have unexhausted basic exemption limit of 60,000, which could have been adjusted against long-term gain if you were a resident. But since you are a non-resident, that amount of unexhausted basic exemption limit cannot be adjusted out of your capital gain. So on the entire amount of 85,000, now you are going to pay tax at the rate of 20% because the transfer was made prior to 23rd July. Yes or no? So can I say the tax on your long-term gain of rupees 85,000 minus unexhausted basic exemption limit, which is not available here, at the rate of 20% will be 85,000 into 20% will give you 17,000. Did you all get this? Now calculate the total tax. Total tax will be 17,000. This is your tax on total income. In this tax, less rebate under section 87A will not be allowed. Why? Because you are a non-resident, no rebate. So tax on total income after rebate is 17,000 only. You'll add health and education cess at the rate of 4%, which will be 680. So here your tax liability will be 17,680. Did you all understand this much? Now coming to the second case. Second case, how much is your total income? 3,20,000. Out of that, 10,000 is your long-term gain. Forget about that 10,000. Are you going to pay tax on 3,10,000? So can I say your total income except LTCG was 3,10,000? On that you will apply 115 BSE rate. So on the first 3 lakhs there is no tax. But can I say on the remaining 10,000 you are going to pay 5%, 500 rupees. So 500 rupees will be the tax on your total income except LTCG. Now are you going to pay any tax on your LTCG 112A? No, because that is within the limit of 1 lakh. So no tax is required to be paid here. So LTCG was within the limit of 1 lakh. Hence you are not paying any tax. Okay, now? Now tell me, 500 plus nil will give you 500. This you could have taken as a rebate because your total income was less than or equal to less than 7 lakhs. But you cannot claim because in this case also you are a non-resident. Can you see? B is also a non-resident. So no rebate will be available here also. So 500 will be your tax. 500 into 4% will give you 20. So total tax will be 520. In the third case, you are supposed to be a little bit careful. Okay. So now your entire income is what? Normal only. No long-term gain. 5,90,000. Are you going to pay tax? Yes. On the first 3 lakhs, even if you are a super senior citizen, but you are following 115 BSE, on the first 3 lakhs, no tax. 3 lakh to 7 lakh, you are supposed to pay 5%, but you are not going till 7 lakh. 3 lakh to 590. On this 2 lakh 90, you are going to pay tax at the rate of 5%. That will be 14,500. Everyone getting this? So are you going to pay 14,500 tax? Yes. No tax on your capital gain, because that capital gain is fully exempt only because that was from rural agricultural land. Yes or no? So your tax liability in this case will be 14,500. Now pay attention, on this 14,500, will you get any rebate? The answer is yes, because your total income is less than 7 lakhs. Total income is less than 7 lakhs and you are a resident individual and you are following 115 BSc. That is why we are checking 7 lakhs. Yes or no? How much will be the rebate you can claim? The entire tax or 25,000? Whichever is lower. Can I say entire 14,500 you will get as rebate? Now there will be no tax liability, no cess, meaning your final tax liability will be nil. Will you remember this? Last one. On 480, are you going to pay any tax? Yes. Up to first 3 lakhs, no tax. And 3 lakh to 4 lakh 80, 1 lakh 80, you are going to pay 5%. So on 1 lakh 80, 5% will be 9,000. And there is no long-term gain. So no tax on long-term gain. Are you going to pay 9,000? Yes. But you are not going to get any rebate here also. Why? Because you are also a non-resident. So your tax liability will be 9,000. Okay. On that, calculate 4%. It is 360. So it will be 9360. Everyone got this? This is when you follow 115 BSc. Same thing, copy and paste. If you don't follow 115 BSc. Okay, no? Now the things will be a little bit different. Not entirely different, but little bit different. Okay, no? So copy and paste the same page. See, now what I'll do? I'll do the same calculations, but I will not follow 115. All these things will remain same, but now my tax liabilities will change. How it will change? How much will be the final tax and all? Those we are going to see now. Shall we start? The total income and everything, total income remaining same. There is no change. But now I am not following 115 BAC. Yes or no? Now normal tax rates must be applied on tax on normal income. Okay, no? So what is my total income except LTCG in first case? 2,40,000. And what was my age? 45. Even if I would have been a resident, no, I would have been a normal individual. Basic exemption limit is 2,50,000. So is my total income within the basic exemption limit of 2,50,000? Yes. 10,000 is unexhausted basic exemption limit. But that cannot be adjusted against my long-term gain because I am a non-resident. So even if I am having a unexhausted basic exemption limit of 10,000 in my first case, still I will not be able to use that unexhausted basic exemption limit against my long-term gain because my status is non-resident. So what will happen here? Tax on LTCG, tax on total income except LTCG will be nil only. And on LTCG my tax will be 17,000 only, the same tax. Yes or no? And what will be my total tax now? 17,000. Will I get any rebate? No rebate because I am a non-resident. So tax after rebate will be 17,000. Apply 4%, which will be 680 again, and tax liability will be 17,680. Everyone getting this? Sure, sir. Now the second case. Second case, 3,10,000. And second case also non-resident, even if the age is 62, not a senior citizen. Hello? Because the status is non-resident. So what will be the basic exemption limit which will be applicable? 2,50,000. So up to 250 no tax. So can I say my total income except long-term gain is 3,10,000, which is more than 2,50,000? By how much? 60,000. So on that 60, any total income over and about 2 lakh 50 up to 5 lakhs, how much tax I have to pay? 5%. So on the 60,000 I will calculate 5%. So 5% of 60,000 will be 3,000. So that 3,000 tax I am supposed to pay on my normal income. But on my LTCG under section 112A, I am still not liable to pay any tax because that LTCG under section 112A is only 10,000. Yes or no? So this will be nil. Now my tax here will be 3,000, which I cannot claim as rebate because I am a non-resident. So my tax will be 3,000. 4% of 3,000 will be 120. Can I say 3120 will be my final tax liability? Now in the third case, be very careful. In the third case, my age is 81. Can you see? And I am a resident also. So I am a super senior citizen. For me, the normal tax rates applicable will be 5 lakhs. Up to 5 lakhs, no tax. 5 lakh to 5 lakh 90. On this 90, I have to pay 20%. So 20% of 90,000 will be 18,000, guys. And I will not get any rebate now. Why? Even if I am a resident, but I am not following 115 BAC. So the rebate limit, the total income for rebate, I will check 5 lakhs. If my total income is more than 5 lakhs, I cannot claim any rebate. Yes or no? So I'll have to pay entire 18,000. But on that 4%, will I get any rebate? No. No rebate. So entire 18,000 I pay, and on that I will calculate 4%, which will be 720. It will be 18,720. Yes or no? Last case, I am again a non-resident. So basic exemption limit will be 2 lakh 50. I cannot take 3 lakhs or 5 lakhs. See, the age is also 82. I cannot call myself a super senior citizen because I am a non-resident. Okay. So 2 lakh 50 up to 250 there is no tax. 250 to 480 it is 2 lakh 30. On that 2 lakh 30 I'll pay 5%. 5% of 2 lakh 30 will be 11,500. Is there any tax on long-term gain, etc.? No, no tax. So what will be my total tax? 11,500. Will I get any rebate? No, since I am a non-resident. 11,500 into 4% will be 460. 11,960. This is my final tax rate. Let's check the amounts. 17,680, 520, nil, 9360. 520, nil, 9360. If you follow 115 BSc. Yes or no? But what if you don't follow 115 BSc? 17,680, 3120, 18,720, 11,960. 17,680, 520. Yes or no? Sorry. Now here. 17,680, 3120, 18,720, 11,960. Can you see the same answers? Yes or no? So, with this, the question is over. And also, the chapter is over. Now, we are going to start with the new chapter. Okay? Take a break. After the break, we are going to start income from other sources. So, take a break for 20 minutes. Done? 20 minutes, and after 20 minutes we are meeting. 11:30 we are meeting. Okay?